After 20 years, the euro and the US dollar have finally achieved parity. This means that their respective exchange rates are equal. Recently, there has been an increase in the amount of pressure placed on the euro, while there has been a spike in investor interest in the United States dollar, which is considered a safe haven during times of economic instability. So, what does this mean? And how does this affect the markets? Hello and welcome back to Crypto Cash Channel. What do you think about the euro and the dollar exchanging at the same rate? Will it affect the economy? In today's video, we look at the parity between the euro and the dollar. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. And without any further ado, let's get into it. Due to a conflict on the border of the Eurozone, an uncertain oil supply from Russia, and a growing risk of recession, the euro temporarily dipped below parity with the US dollar at the beginning of July. Parity refers to an exchange rate of $1 to €1. It had not been seen since December of 2002 when the currency was only starting off and was still in its infancy. Investors have developed an unhealthy preoccupation with round numbers due to their perceived aesthetic appeal. When it comes to the markets for currency exchange, analysts working for the Dutch firm ING stated that a level of 1.00 is probably the greatest psychological level around. It is considerably more astonishing that the euro has broken through this level than the pace with which it has dropped versus the dollar. The value of the single currency used by 19 European nations has decreased by more than 11% so far this year. The fast decline of the euro has coincided with a strengthening of the United States dollar relative to virtually all other currencies throughout the world. For many years, the dollar has been considered one of the most secure places to keep one's savings. Currency values, much like those of stocks and bonds, tend to move about in reaction to the expectations of investors. When investors feel that the value of a currency will increase, they may buy it, and when they believe that the value will decrease, they can sell it. Also, they are a representation of the demand for a country's assets on a worldwide scale because acquiring dollars is a prerequisite for purchasing assets such as US government bonds or Apple stock, and the majority of international commerce is conducted in dollars. As investors seek a safe haven for their money during times of economic instability, the dollar's value has increased relative to that of other currencies, as is typical in such periods. So, how was the euro invented, and when? With the intention of making Europe a wealthier and more stable region, they invented the euro in 1999. As a result of the two world wars, it was hypothesized that common institutions would reduce the possibility of violent conflict and also offer diplomatic venues for the resolution of conflicts. The euro was essential because it served as a symbol of this oneness. But still, the value of the euro is proportional to the degree to which people have faith in it. It was a true test of that notion 10 years ago when investors fled the bonds of heavily indebted countries, and rescues ignited disputes about the appropriate course of action for the government's finances. During the time of the crisis, there were some worries over the viability of the currency over the long term. However, such worries have since been eased. As a result of the conflict, Europe's political and financial stability has been put to the test, which has caused a broad variety of reasons to rise against the euro and rise in favor of the US dollar, which has once again established itself as a safe haven during times of economic turmoil. Both the outbreak of disease and the situation in Ukraine have had an effect on supply networks all over the world. Since Russia invaded in February, the price of oil, natural gas, wheat, and fertilizer has skyrocketed, which has contributed to an increase in the cost of both food and energy around the globe. This has led to the highest inflation rates seen in a considerable amount of time. And what do you think are the governments doing in these times? Central bankers in the United States and Europe have come to an agreement to boost interest rates in order to combat inflation. This comes despite the fact that the global economy is continuing to struggle. Attempts to wean Europe off of its dependence on Russian energy are becoming increasingly difficult as a result of constraints placed on Chinese supply as a direct result of the recommendations established by COVID-19. The value of $1 has increased, but the value of €1 has not benefited nearly as much from similar changes. And as the value of the euro decreased, concerns about an economic slowdown in the Eurozone increased. The value of the euro dropped to its lowest level in 20 years last week due to growing concerns regarding Europe's energy supply and the possibility that Russia might permanently shut down a vital natural gas pipeline to Germany. But was the dollar to euro parity anticipated? Well, parity bets have been piling up for a number of months. traders at Nomura in Japan, led by Jordan Rochester, had been predicting a dollar to euro parity as early as April. This was due to Nomura's exposure to global markets. Additionally, JP Morgan Chase and HSBC also provided predictions that were comparable. It was then announced in July by Christine Lagarde, the president of the European Central Bank, that interest rates will be increased for the first time in more than a decade. This will mark the end of the 8-year era during which negative interest rates were in effect. Now, authorities have extended their commitment, saying that when interest rates rise again in September, the spike might be considerably higher than the one that happened in July. This statement was made in response to the fact that the July increase in interest rates was already expected to be significant. Despite this, there was no way to alter the path of the currency as a result of the event. Analysts from HSBC said in a letter to the bank's customers at the beginning of July that it is impossible to find anything positive to say about the euro and that the current economic scenario is rather tough. So, what does the future hold for the euro? Concerns over the future of the euro have been alleviated by recent advances in the consolidation of the European Union. After 10 years, the central bank's dedication to maintaining the value of the currency has not been called into question. On the other hand, the European Central Bank is worried that a weaker euro might make inflationary pressures in the region worse by driving up the cost of imports. However, even if the central bankers publicly state that they are not aiming for a certain exchange rate level, it will be impossible for them to stop the decline of the euro simply by saying those words. The Federal Reserve has tightened monetary policy in the United States by considerably boosting interest rates in response to the rapid pace of inflation that has been observed in the country. At a conference in late June, the chairman of the Federal Reserve, Jerome H. Powell, projected that the benchmark rate would increase to 3.5% by the end of this year. In an effort to slow down the growth of the American economy, there is a possibility that interest rates may be increased to an excessive degree. Nevertheless, the more significant risk is that inflation will continue to increase unchecked. Ms. Lagarde, during the annual retreat held by the European Central Bank in Sintra, Portugal, believes that inflation was a real possibility. The only thing that investors can do till the end of the year is speculate about what will occur. But even before the first rate increase, which is scheduled for the 21st of July, investors are asking how far the bank can raise rates before it is forced to stop again because of the growing possibility of a recession in Europe. The authorities in Europe are not taking any action to attempt to rein in their economy, which has been heating up to dangerous levels. Instead, they are doing nothing. But at least not to the extent that would be considered an epidemic in Europe. In light of the fact that the European Central Bank is preparing for future increases in interest rates, the markets for sovereign bonds need to be carefully observed. In the upcoming year, it will be another tough period for the Eurozone, as will be the case with its central bank. And that's all for today's video. Thanks for watching. Do you think the euro will recover from this deep? And how fast will the euro to dollar parity break? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. See you in the next video.